The consensus seems to be that the global economy is slowing down. Yet there is one banker, at least one banker, Eric Verleyen, whom I have here in studio today, who believes that things are actually not that bad. So Eric, you are the CIO of Société Générale Private Banking, and you've just told me that the situation is not that bad. How so?
Yeah, actually the global economy is going on the upside. And if you look at the figures for this year, the economy will grow at 3%. Here I'm talking about the global economy, and we're coming from 2.8. So if you look into details, you would see that both emerging markets and developed markets are adding more growth, actually. So the global context is not that bad. But obviously, markets are not looking at it, as you were mentioning. So what have been markets looking at since the beginning of the year? As we know, first, China. China going into a hard landing. Well, our view on this is that China is decelerating. We could expect that, actually. It's going to decelerate to 6% coming from 7%. Even if we are wrong on this and it goes to 4 to 5%, it is not a hard landing. Okay, so pretty confident on this.
Are you confident about what you're hearing from policymakers there?
Well, I think we are confident that they would be using some tools such as public spending, actually, to be able to manage this soft landing. Okay? So, of course, it is a big challenge for them, and we know it's a very strong change in the economy, but we think it's manageable. Okay? Second element, which has been the focus on and the attention on market, is oil. The oil price is so low, it reached $26 over the last days. The market is really fearing that this is very bad, and we are going into a huge recession because of this oil price. Well, our view is that the oil price is the result not of the demand decrease, but of the supply side actually increasing. So we are thinking that, okay, it is very tough for those oil producers, oil companies which have been involved in shale oil, for example, of course, but they will suffer, but at the same time, at the end, it's going to be a positive for the global economy.
So for the consumer, to keep our eyes
for the
on
consumer,
the long term.
It's going to be positive. In the short term, people do not realize it, so maybe they are not using the money, they are not spending, and they save it. But at some point, they will realize that we are in an environment where the oil price will stay low for longer. Then on the corporate side, it will also be positive. The third actually focus that market has been looking at is a recession in the US. Well, I mean, the US is going through a pretty steady growth, and the growth we are seeing for this year in the US is 2.4%. It's the same as last year, actually. It's very robust. I mean, if you look at the labor market in the US, it's very strong. If we look at consumption, it is very strong. Of course, salary have not picked up yet, but we think gradually it's going to come. Then finally, there is another risk markets have been looking at is the banking. Banking. Are we going to have another banking crisis?
And we've heard many bad news coming out of Europe and not only from that region.
Many bad news, but at the same time, it's all connected to some results. Also, banks are showing, results which are not maybe as exciting as in the past. At the same time, because now they are, well capitalized and they have cleaned their books and they are really stronger, well, it comes at a price where they are making less money. So, I mean, banks are safer. Of course, they're going to make less money, but at the same time, there is no financial crisis coming from it. So clearly here, we see a disconnection between the fundamentals and market reaction.
Okay, so overall, you have a positive outlook, but what worries you? There must be one thing.
Well, I think what worries us is, of course, that we were wrong on China, for example, and that's something, comes out of it. This is clearly one thing. And that's the worry is that actually what we see into markets, so this fears that we see and these people losing confidence into the markets materialize in the real economy, because if entrepreneurs lose confidence, they may invest less. The consumer actually may also consume less because he's worried about this financial market, and at the end it has an impact on the real economy. So it's a kind of a self-fulfilling prophecy. So that's obviously what would worry me, I would say.
So potentially being wrong about China and the fact that there may be contagion spreading from the sentiments in the markets onto the real economy.
Exactly,
so two things to keep an eye on.
Exactly.
Thank you very much for your comments.
Thank you very much, Ilya.